This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello, everyone. Welcome. We have a live Lightspeed today. I'm Jack Kubinek. I host Lightspeed. It's kind of our Solana-focused podcast here at Blockworks. Do we have any Lightspeed listeners in the audience? Show of hands. There we are. That's me. Love you all. Thank you for coming out. Good to see you guys. We have a special treat for you today, which is a live Lightspeed episode where hopefully I'll let these experienced, builders, crypto OGs talk, and I'll just kind of sit back a little bit. I'll go down the line here. We have Armani from Backpack, Santi from Inversion Capital, Never Stop Inverting, Luca from Pudgy Penguins, Tzvi from Baxus. Very excited to get into it with these guys. This panel is about acquiring and keeping real users in crypto. And my job is to ask questions, basically. So I'm going to start with the question. Santi, how do you acquire and keep real users in crypto?
Great question. So historically, you haven't been able to do that, is the short answer. If you look at all the retention data, for instance, when Trump coin launched on Friday, you had, shy of 1 million people come on chain. And it's been really challenging to retain users. Why? Because if everyone comes with the longer you stay in the casino, the faster you're going to leave. Like at some point, that user experience is broken. Now, there are some rare exceptions. I would say, I think what Pudgy Penguins has done is probably one of the few instances in crypto where you have built a really good community. There's strong retention. You've branched out and met the customers where they are. I remember seeing your, the Walmart, you're in Walmarts, you're in Targets of the world. Crypto's not a relatable piece of technology today. So that's really why we started Inversion, which is we want to acquire traditional businesses where the crypto part is very much invisible. We don't want our users to ever think or have to deal with the complexities with crypto. At the end of the day, they're using a mobile plan, they're using a bank account, a digital wallet. And so it really is crypto is transformational technology. So, it's really, really hard to change consumer behavior. So the retention on chain is very poor because the only thing that people are doing, most of the things, is just purely coming through an exchange with a speculative mindset, and the retention is just non-existent.
And Santi, we should maybe intro you a little more. Your recent venture is one of the more interesting, bolder bets, I think, in crypto and consumer, which, to my understanding, and correct me if I'm wrong, it's somewhat akin to private equity for blockchain, where you have this firm called Inversion Capital. You'll acquire companies that are struggling to find PMF or something, and you'll basically show them how crypto and blockchain rails can improve their existing business, which is really, really interesting. So I guess I just want to ask, you launched a few months ago, I believe. How's that been going? What are the learnings just in the very early innings of Inversion?
Yeah, well, thank you. I think since I left ParaFi 5 years ago, I had this idea. There will come a time where you can acquire traditional business and make it more efficient. Because crypto is a step function improvement. At ParaFi, we are early investors in DeFi. Financial infrastructure, if you really understand the financial system, you understand that there's just so many costs and friction. And so go study any system, whether it's a healthcare system, any type of company has friction in their P&L. And you dissect the P&L and you understand where those friction points are. Now the challenging part is, it's not to say that companies don't want to remove these costs. It's just that they haven't been able to do that. Any business doesn't want to pay 2 to 4% payment processing fees or have to deal with chargebacks, but they've just been constrained because they've dealt with the current limitations of a financial system that predates the internet. And so now crypto comes along, and we've been sitting on these panels for the last 7 years telling people that, crypto is going to be the settlement layer of the internet, but no one believes it. So what has changed? And I think, so I started Inversion in November, registered the company the day that Trump got elected. There's a very intentional reason why we did that, because you had a 180 change in the regulatory environment. And so when you want to go adopt this, to implement this technology at scale, this becomes really important. And so it's not a surprise that Stripe has now done 2 acquisitions to really do a step function improvement. And I think that's all you need to know. I mean, Stripe acquiring Bridge to be able to tap into stablecoins, and then acquiring Privy most recently as perhaps the most founder-led and savvy fintech in the world, just tells you that they very much see the opportunity that we've been seeing here for a while, which is, you know, allowing you to make businesses run vastly more efficient with crypto rails. And that's really the core of what we do. There's many different businesses where you can apply this. And the most interesting thing is that we've battle tested and pressure tested this technology over the last, 7-8 years. So we're very much ready to go mainstream. So the last thing I'll say is the question that sort of like I'm obsessed with is everyone at some point discovers crypto, and like you don't look back, right? You don't want to send a wire transfer. You want to very much transact with stablecoins. You discover digital collectibles and you understand the value of that, or provenance if you're dealing with alcohol and whatever. And so the question is like, why don't we have more users on chain? And to me, that's something that I feel really passionate about. If I can bring 1 billion users on chain, I think the way to do that is acquiring large businesses with really large user bases, and then kind of turning on the lights with crypto, where most of the time users will not realize that they're using financial infrastructure that is powered by blockchain. And that candidly is our North Star. That is our end game. And so, yeah.
So to that question of why aren't there more real users in crypto, I would posit that one possible answer you could give is that it can actually be quite profitable to just cater to the capital that's already here. Launch your points program, get a bunch of people to farm the token, drive the token, sell it OTC, make a bunch of money, go buy, an Italian villa or something. And that creates sort of toxic incentives where you don't necessarily want to acquire new users. So I want to take it over to Luca, who I think Pudgy Penguins, this sort of NFT company turned IP play, has a lot of crypto natives. You launched the Pengu meme coin and so forth, but I think you've also made some real attempts to drive like just everyday users with things like the Walmart and Amazon plushies. We have a couple of those in the Blockworks office. So I don't know, how do you think about overcoming some of these maybe toxic incentives to just look at the users and capital that exist in crypto today? And why is it a good opportunity to try to reach new people?
Yeah, I think you hit it right on the head, which is I think the sustenance around crypto product builds has really been predicated around looking inwards and not outwards, because it's super profitable to look inwards. And ultimately, you've conditioned crypto builders to build in a certain cadence. And that cadence has been look inwards, make a ton of money, and kind of run the playbook that you kind of described. I also think looking outwards is more of a long-term game. And in crypto time, you don't have that 2-day weekend, right? That like I think most traditional people have. Like time is extremely accelerated. And so what might feel like one fiscal year really, or what might be one fiscal year really feels like 2 fiscal years. And so this idea of like building for 10 years, I think is like really intimidating, because there's definitely months and swings and roller coaster moments where you're like, I can't even do this for 2 more weeks. So I empathize with that, but I think it's really been the cadence in which crypto builders have been building and how they've been rewarded and conditioned to not build for the net new user, because it's really difficult. So one thing that I've learned is crypto builders, this cohort of crypto builders, they really don't understand consumer. And so there's this like certain interesting things like, Connect account and Connect wallet is a perfect example of like Connect wallet. Only Web3 people know really what that means today. Connect account can mean the exact same thing as Connect wallet, but Connect account has a TAM of, 6 billion people. Everyone knows what Connect account is to a certain extent. And so I think there's just like this reworking around, people really building products that I think are there to solve problems and are predicated and built to invade their heart and mind and not their financial aspirations, right? I think so many of the builds when looking inwards are predicated around how do I create some sort of scheme, Ponzi scheme or finesse to go and make my users more money, and eventually it crashes and burns. But like there's a sprint of maybe a couple months to a year to 2 years where that's really profitable and could be life-changing for both our early user base and the founders and the people involved with the company. But I think there is this new paradigm shift where it's not as easy as it once was. The schemes are running out. The Ponzi's are running out. We've seen a lot of iterations of what I think that short-term mindset kind of brings. And now I think the best builders are forced to look at like, okay, how do you capture and create value? You're going to capture and create value by building something that is not predicated on price going up and down. Because if your business or your product or your protocol is predicated on the market conditions and the volatility or lack thereof of crypto, you're fucked. Like you're completely fucked. And so if you that transition's being forced now, I think, and I think the place that we're trying to capture is the heart and mind. Like, how do I treat conversion like a process and not an action? I know I'm here for the next 20 years. I know the ebbs and flows of the IP business and all the things that come with it. And I think from our perspective, we've always been focused on that, and that's been a little bit of our edge case. But I think my advice to the builders that are looking for that next generation of crypto growth, of how to acquire users and retain users, I mean, you've really got to build something that I think is not completely predicated on the financialization of crypto assets, and really leverage blockchains as a tool for global composability and accessing global liquidity, and saving those massive percentage fees on processing, which is like a big deal, right? Like these things actually solve huge problems. Like not everything needs a token and needs to be hyper financialized, though I think for that early growth, actually, I think played a huge part in growing crypto to where it is today, but it's not where crypto's going 10, 15, 20 years from now.
Do you have thoughts on, because you're working to develop abstract chain, this kind of consumer blockchain as well. Do you have thoughts on how developers can reorient themselves to think more for consumers as opposed to for themselves or for crypto or whatever it is?
Dude, abstract taught me so much here, which was crypto builders are 90% of the way there. The problem is the Achilles heel of crypto builders is branding and marketing. I mean, complete deficiency, right? And actually what I really think a lot of people need is like, they have the builds. It's the language, it's the framing, it's the positioning. As I start to get behind the scenes of all these consumer app builders, I'm just seeing they're so wired to, again, the existing crypto audience that it's like something like create wallet versus create account. Everything should be create account. It should not be create wallet, in my opinion, if you want to address the bigger TAM. And it's just like certain user flows where in consumer products, right? Like, I made my career on Shopify with e-commerce. Like the whole thing with e-commerce is if you remove steps from the equation, your conversion can go from 1 to 2% on 1 million users. That could be the difference between $5 to $10 million a month in rev. In crypto, it's like there's so many different steps, and everyone is, I think, trying to just speak again to that current user that if you just switch the framing and positioning and you had the mindset of like, how do I speak to my dad or my niece or my nephew or my girlfriend and not my homie, my peer who's within crypto, you would see, I think, a huge paradigm shift. But again, you're not necessarily rewarded for those certain little edge cases, but you're starting to see it here with people like Polymarket and a couple others that I think are taking huge strides.
Thanks to Katana for sponsoring this episode. Looking for the next big chain? Katana isn't yet another new general purpose blockchain. It's purpose-built for DeFi users and focused on giving the best experience possible. It does this by sustainably generating deep liquidity and high yield. If your assets are sitting idle, they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest of the work for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners, including Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of CAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for some lucky depositors. Thanks again to Katana. Soul lovers, grab your Ledger Flex Solana Edition now at the link in the show notes. The Ledger Flex Solana Edition is now accessible to anyone who holds Sol in their wallet. Any amount of SOL held on any wallet will do the trick. You'll also get a Magnet Folio, SBT, and $20 in Solana. This is your last chance to grab the custom Magnet Folio and SOL voucher, so don't miss out. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. So, something else I think would be helpful to bring up is that in my view, crypto still has a bit of an image problem. We're live from Brooklyn, New York right now. I live here down the road a little bit. When I go to parties in Brooklyn and I say that I write about crypto for a living, there's a general kind of that everyone else has around me. And I think that this crypto cycle has produced a lot of returns for investors, but there's maybe not the floodgates opening to new users, like at least in my experience there was in 21. So I want to actually kick it over to Tzvi, because you run this sort of blockchain marketplace for spirits and liquor. And when I think about spirits collectors, I don't necessarily think young, tech-savvy crypto bros. And you know, crypto might sound a little scary to some of them. So how do you think about that crypto image question? And when you're trying to draw users, how do you not scare them with the idea of this is on the blockchain or something like that?
Yeah, so I think to your point and what Luca and Santi were discussing is part of the biggest issue is you actually have to build something that people want. Like, it's not about whether you can make finance more efficient or whatever, because for the average person, they don't need to worry about sending a wire over the weekend. That's not their biggest roadblock in their life. I always look at Nike as an example. They have the Nike app, and then they have the like Nike Drops app. And like normally you talk to anyone, they're like, no, keep everything in one app, keep everything unified. But Nike realized that people are willing to jump through crazy hoops, log in, register your shoes, because they actually want that limited edition drop. And so that's I think the bigger point into what Luca was saying about thinking about the consumer is, what does your consumer actually want? So at Baxus, this was one of the first things that we really set out for, was our target audience. And yes, there are young tech savvy crypto bros who are also whiskey collectors and enjoyers, but our target audience wasn't them. They weren't our initial audience. They weren't the moat. And one of the reasons for that also in consumer crypto, and what makes it, I think, so difficult for companies to emerge, is the second you have something that's good and is working, 900 copycats pop up. Everyone tries to rip off your idea because they see that you're running revenue and you're actually getting volume and traction. And so you end up fragmenting that very, very small audience already of on-chain crypto users because they're trying to farm your point system or trying to actually, gain value and extract value elsewhere. So for Baxus, what we really targeted on, and to the point of the create account, is when you log on to Baxus to view your account, to buy a bottle of wine, to buy a bottle of whiskey, the first thing you're doing is it's social sign-on. Connect your Apple ID or your Facebook or your Gmail account, enter your email. We don't focus on the wallet component at all, because it's just not something that is core important to the initial user. And it's something that if you are a crypto person, you will find later, and you see it. The only place where you really see your wallet is at checkout, because that's what matters, is when you're able to pay. And so what's been really cool about Baxus is we have onboarded net new users to crypto, because when you go to our checkout flow and you're ready to buy your bottle, it will show you how much you're paying in credit card fees. But right underneath it is HelioPay, and it says, if you pay in crypto, save X number of dollars. It shows you exactly how much money you will save by paying in any token effectively on using crypto. And so people start to ask us, like, wait, how do I save $50 on a $1,000 bottle? Like, how do I save that 5%? And the answer is, well, here's how you can on-ramp to USDC into your account. And that has brought on net new users because they get a tangible benefit. It's not you can now send a wire on a Sunday. It's that bottle you're buying is now costing you less money. And so that has been a really, really important part for us. Like, we have, I'd say, probably the oldest average user base in all of crypto. We have users in their 70s and 80s who are using our platform to buy and sell bottles. To the point before about talking to your dad, we say talk to your grandfather. So one of the things that we notice always is a massive ramp up around the holiday season, Thanksgiving in particular, because people go home, they're talking to their parents, they're talking to their friends and family, they're like, oh, how's your magical internet money doing? And they want to show them something that they can actually do with it. And they're like, hey, what's your favorite bottle of bourbon, of scotch or whatever it is? And they go and they immediately use their crypto to pay for it. And then they can immediately gift it in an account to their dad and have him choose to redeem the actual physical bottle. And so that brings on net new users, both to Baxus and the platform, but to crypto in general. So I think the most important thing when we're thinking about consumer is not what are the problems that you're solving by using crypto, but what is the problem you're actually solving? And then how does crypto make that more efficient and more beneficial?
And so if we truth seekers on this panel want to understand crypto consumer behavior, the biggest, most successful consumer businesses in crypto right now are still exchanges. And so Armani, I want to ask you, building Backpack, a kind of wallet and exchange, something we've seen in the exchange world recently is a transition to just adding more and more financial services. So Coinbase has this like Bitcoin credit card. Kraken is tokenizing stocks and things like this. Is that, well, let me not lead you too much. What is the way forward for crypto exchanges? Are they going to become more like banks, or is it something else? Like, where do you see that whole space moving over time?
It's a good question. Crypto exchanges are these weird products because they're not quite banks, although they kind of look like banks. They're not quite brokerages, although they certainly look like brokerages. They're not quite, payment processors. They're not quite, they have custody, but they're not custodians. And they're these weird global operational beasts where you mix together all of these different customers from all these different parts of the world with all of these different requirements. And, I fundamentally look at exchanges through the lens of finance. And if you look at the financial systems in different parts of the world, you end up with like very different conclusions with respect to who's using crypto, who's the audience, and why is it important. We're sitting here in New York, more or less objectively, the finance capital of the world. The US has the deepest, most liquid, most trusted and fair, most effective capital markets in the world. It makes crypto look like a joke. It is a joke for all intents and purposes when you compare it to the New York Stock Exchange or NASDAQ or whatever, by any measurable metric, in terms of value being traded, in terms of the efficiency of the systems, in terms of the market integrity and the fairness and the market structure. And so you ask the question like, well, why is crypto important? What is it all just a scam? Is it all just a speculative casino? And you see a lot of people ask that question, especially in the US. And there's always kind of all this confusion around the industry and kind of like what we're building here. And you'll notice the apps and the use cases that are most, I guess, widely used in the US, they're not core, financial services apps or products in the sense that you're not putting your IRA into crypto apps. You're not putting your life savings into crypto apps. You're not paying your bills with crypto apps. You're not buying, coffee with crypto apps in the US. What you're doing is you're speculating because it's, a fun, effective, 24-hour casino. But what you're really seeing in the US is you're seeing the institutions, whether it's, Robinhood on the more kind of, cutting edge side of the spectrum, or, Stripe, doing their thing, or now like the banks or JP Morgan doing their deposit coin or whatever, the folks that actually own the consumer relationship, with, users starting to look at crypto as like a back-end technology. And so for them, this whole meme of swapping out the back end from, this like ancient, outdated, financial system that's gotten us really far in the US, which is basically built on a bunch of paperwork and a bunch of legal code and a bunch of compliance and a bunch of regulation and a bunch of human interaction. You're seeing them swap all that stuff out, or at least optimize it with crypto. And that's working really well and appears to be extremely promising for kind of, all the institutional adoption, which is really the whole meme of this cycle, right? You can see this in the Circle IPO, right? Where you talk to anybody on Wall Street and they'll all tell you the same thing. They'll say, I'm simultaneously extremely bullish in crypto. Give me as much exposure to crypto as possible. However, I don't know how to express that sentiment because of all of this red tape that exists that prevents them from legally spending dollars to get exposure to the asset class. This comes in various forms. It comes in the form of compliance requirements from like hedge funds or asset managers. It comes in the form of LP agreements, just arbitrary kind of, maybe not arbitrary, but just agreements between investors and like fund managers with respect to what they can actually invest in. And so what you have is this like classic supply and demand curve where supply is really low, demand is really high. And so assets are getting priced through the roof. Because like if I'm, a hedge fund on Wall Street, what do I buy? I buy MSTR, I buy the Bitcoin ETFs, I buy coin stock, or now I buy Circle stock. And so you're seeing this in the price, right? I think it's kind of some frenzy or this mania that's happening that doesn't necessarily reflect fundamentals, but it's because of this trade-off. And so that's kind of like what's happening in the US, right? I'm from the US, but I live in Tokyo. So I kind of see both sides of the world. And what you see in Asia is a very, very, very different story where the exact opposite is happening. You have a lot less institutional demand and way more retail demand. And it's because there's product market fit for consumer use cases in Asia in a way that's very different than in the US. Because in the US, most of the consumer use cases are more or less satisfied by the well-built kind of financial system that we have. But suppose you're in mainland China. OpenAI comes out with ChatGPT. You want to buy a subscription to ChatGPT. How do you do it? You can't. You can't buy a ChatGPT subscription. The Great Firewall blocks you. You don't have a credit card that you can connect to, OpenAI's website or whatever. You have capital controls that prevent you from getting money out. And so you literally can't buy a ChatGPT subscription. And so, putting aside kind of the whole speculative component, we see a lot of people demanding real world use cases in Asia, asking for things like debit cards, asking for, savings accounts, asking for yield, all of the things that I think folks in the US might think, oh, this is like old stuff or whatever. But folks in Asia are very much looking at it through the lens of, oh, wow, this is actually, liberty kind of inducing, and it allows me to actually do stuff with my money that I'm actually not allowed to do with right now. And this is happening not only in Asia, but also all around the world, right? South America is like the other like classic example, right? Where you have Tron as the USDT chain for the world right now, right? With tons of real world use cases for people that just want to move dollars around. And so I think when you're having the conversation, you kind of need to look at it through the lens of like, what's the vertical? So if, finance is what we're talking about here, there's obviously like gaming and entertainment and then tons of other use cases. I kind of look at it through the lens of finance because that's what we're building. And then, where in the world are you? And what are like the interesting kind of like holes that exist in those markets, right? I think Japan is another really interesting example where, there's not that many kind of folks from the US that are going to go move to Tokyo, spend 2 years there just so that you can launch an exchange that's licensed and regulated. But the reason we did that, and the reason why we're doing that, is because there's a huge opportunity in Japan that everybody's been sleeping on for the past couple of years. And you're starting to see that play out already, where today I think the JFSA kind of announced that, they're reclassifying crypto as an asset class, where, traditionally it's been taxed as a currency at 55%. We expect that to go down to 20% kind of over the next year or so. And so there's all of these like institutional and retail tailwinds in Japan in particular that makes it for like a really interesting place to build an exchange. And so I think it depends on like where you're serving customers and whether you're, regulated or not. And that kind of determines the type of products you could have. And that kind of is going to play out with like these centralized exchanges kind of offering this like mosaic of different services that are beyond simply just like trading. And so I think you have to ask these questions when having this discussion.
Thanks to Katana for sponsoring this episode. Looking for the next big chain? Katana isn't yet another new general purpose blockchain. It's purpose-built for DeFi users and focused on giving the best experience possible. It does this by sustainably generating deep liquidity and high yield. If your assets are sitting idle, they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over and Katana does the rest of the work for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners, including Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of CAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for some lucky depositors. Thanks again to Katana. Soul lovers, grab your Ledger Flex Solana Edition now at the link in the show notes. The Ledger Flex Solana Edition is now accessible to anyone who holds Sol in their wallet. Any amount of Sol held on any wallet will do the trick. You'll also get a Magnet Folio, SBT, and $20 in Solana. This is your last chance to grab the custom Magnet Folio and Sol voucher, so don't miss out. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Yeah, that's a good nuance to add, is like it's very different considerations in the East versus the West, even still with the new regulatory regime. I want to pose a question just to whoever wants it, which is that I think if you talk to some crypto builders or founders privately, some of them feel a lot of discontent with the fact that a lot of crypto still, as Armani kind of alluded to, is built around speculation, especially in the US. And it can feel like, I came in to build fairer, more transparent financial rails or better consumer apps. And the only way to find PMF is to feed into the casino. So I guess why build consumer, and what gives you guys optimism looking outside of just the speculative use cases for crypto?
Yeah, I think I'll answer that part two ways. I think why build consumer? I was just talking to Carl outside here from 6-Man Ventures, and I basically told him, I was like, if apps on the chains aren't worth more than the chains, the thing is going to be broken. And so what I mean by that is like, let's just take Python as a programming language. If Python had a token, right, and Python was tokenized, what would be worth more? Instagram, which is built on Python, or Python? The answer is Instagram, right? So if you're looking as an entrepreneur and you're building products, right? Every entrepreneur, I hope every entrepreneur has some sort of capitalistic mindset and wants to make money for himself and his family or her family. And so the point of the matter is like, I think the biggest value capture for entrepreneurs in crypto are going to be building consumer apps. And so, why build a consumer app? Because I think you're going to make the most money doing it. Now, the kicker is it's not going to make the easiest money doing it. The easiest money, though it's smaller money, is probably doing and catering to the rat race and the current cohort and the current build styles, at least in the short term for the next couple of years. But it depends what type of aspirations you have. If you're a builder, I would hope you would want to build a business that's worth tens, if not hundreds of billions of dollars, and not something that is, I hope your dreams and aspirations are more than making $5-10 million. Unfortunately, most builders in crypto, their aspirations are to make $5-10 million, then move on to the next thing.
And that's very much the opportunity, I think. We have anywhere from 30 to 60 million active users on chain today for a $1 trillion+ industry. User aggregation theory will continue to be the case for this industry. And to Luca's point, if you the last 10 years have been very much predicated on building infrastructure, more value over the next 10 years will be created at the user aggregation layer. Now, that doesn't mean it needs to be a crypto native company in its own right. It could be a Robinhood. It could be a Nubank. It could be any sort of crypto enabled business is going to be a huge thing over the next 10 years. That's not to say that these businesses are going to make the rational decision of saying we can enter new markets, we can serve new customers because this technology has allowed us to go there, whereas it was uneconomical before. And just pay attention. It's happening already. Anyone that says this is just a casino has not spent nearly enough time looking at transcripts of Nubank, of Robinhood, and other businesses. I mean, on the daily. Deepen as a category, for instance, you have hive mappers of the world that have created these data-rich networks, and companies, Fortune 500, Fortune 50 companies are starting to use them. And so I think, we're all sort of jaded as an industry where we feel that there's no use cases and we like to mock it as it's just a casino. But I actually think more value will be captured by non-crypto native companies that come into this industry and realize I'm going to use stablecoins, or I'm going to use a deepened network, or I'm going to use Backpack's crypto as a service infrastructure to go into a new market and leverage that technology because it's composable, because it's 24/7, it's 365. And look, the arc of technology is always the same. Like 20 years ago, people were skeptical of the internet. And you had one industry that really pushed the development of the internet and everyone hated it. And the same way that people hate meme coins today. And that was porn. And porn really pushed the internet to a point where it is today. And I think that's just, it shouldn't scare us. And I think if you're here sitting and you're refreshing CoinGecko to see the prices go up, now I can't think of a better time to start a consumer business because you have all the infra and all the tech that's been battle tested and pressure tested over the last 7 years.
It's just gotten to the point too where like 6 months ago, all the things that like would bottleneck you before. So you're actually like at the very beginning of the consumer crypto revolution, dude. Because 6 months ago, Privy, and there was a couple guys who just did the last final steps. It's a wrap. Now you can actually build a true enterprise consumer product without being bottlenecked by infra. And that statement's only been true for the last 6 months.
But don't be deluded. If you hear anyone in this conference say that the UI UX in crypto is worse than Web 2, run away. That's a scammer that doesn't know anything what he's talking about. He hasn't used a crypto product and probably hasn't used Polymarket, probably hasn't used any of your apps. So in fact, I would go as far as saying the UI UX in crypto is smoother. You just need to tinker with it.
I do think one last point though on consumer is that like you can again both tap into the speculative and the financial side while also, and again, why consumer is joy. Like you can actually tap into something that brings the user joy or access to something they wouldn't have. Like I'm going to call you out for a second, Jack, but we went to a tequila tasting. You got a limited edition bottle of tequila. Only 800 of them were made and they were only available in Brooklyn. You bought that, you put it on Baxus, you sold it, like you made some money, which is great. But more importantly, somebody who was not in Brooklyn on the 2-day period where that bottle was released just managed to get something that brings them joy. The person who bought it is a huge tequila collector. So
it was joyful. It was a joyful day for me.
There you go. So you're happy because you made money. And he's happy because he got something that he otherwise would not have access to, but that he wanted, not because he thinks the number is going to go up. He actually wanted the item or the thing that he was buying. I'd say, Luca, the same thing when I look at like Pudgy Penguins and like what you guys did with Vibes with the cards. Like, I'm planning on learning. Like, I love TCG, and the idea that I could sit down with my brothers and do that and like get joy from the utility. The utility is the joy, I think is really cool and something.
Emotional utility is the word. I love that because everyone's like financial utility. One of our successes has been emotional utility. And I love that you bring that up because consumer does that better than infra and trading and all of that. And emotional utility is arguably, emotional value is just as much as financial value to a certain extent.
Maybe one last kind of parting thought to address the original question, which is to the builder or the person in the space lamenting about the speculative component. I think one only need to observe the Circle price drop or price chart to note that speculation exists everywhere. It exists in traditional finance and certainly in traditional markets. And those markets underpin, all of the world's value. And so it's not necessarily a strictly like negative thing. And it certainly shouldn't be kind of, thought of as, some special thing that makes crypto bad. Speculation exists everywhere and you just need to look at the chart.
Well, one thing I'll just add to that is I wouldn't build your product around speculation because no amount of financial engineering is going to solve for a crappy product. Go build, like, how many of your users buy Pudgy Penguin because they just love the goddamn penguin?
Yeah, we've exceeded the number now. I couldn't even tell you.
And I think to what Luca said, emotional utility, that is your moat in consumer, because somebody could build a slightly cheaper version of what you've built, or somebody could try and knock it off and rip it off with better incentives, but you can't recreate that. If somebody is dedicated to using something because it brings them joy, the cards have effectively composable points that you can trade between different reward systems. Like, it's limited. It's not, completely permissionless. but people will dedicate themselves to one airline or one hotel chain because it means that they can get an upgrade. Like that is the utility. And that again, that emotional component, the I fly XYZ airline because I get upgraded to business, or they greet me by name whenever I fly. That's a moat for a massive industry. And people are willing to pay 3.5% to use a credit card just for that emotional utility.
Well put. Well put. We covered a lot of ground on this panel. The current, future, the pessimism and the optimism around crypto consumer. Thank you guys for taking the time to chat with me. We're over time here already, but this has been live Lightspeed from Brooklyn, New York. Everyone, please give a hand for my guests here today. Thank you all.